Welcome back, ladies and gentlemen, to the main event. The event in the investing community. Like, this is a lifetime of I don't even know what's going on. I can't even get my words out correctly here, folks. But we're going to be taking a look at Google, Visa, and Microsoft's earnings. Whether that's going to crash the market or not is going to be completely debatable. But as many of you know at this point, I am completely sidelining all of my tech investments, something I started doing at the beginning of the year, and I've decided to go full on until I get more certainty into what the heck is going to be happening over the next couple days here, folks. We got UPS earnings that just dropped, and those numbers were surprisingly good, but there was one statement that sent the entire e-commerce sector down, and that was that they are seeing a slowdown in commerce. They still expect growth, but a slower period moving forward. And God knows, guys, we expected this. You think the market would have priced this in when companies started lowering their guidance going into the beginning of this year, but it doesn't look to be that way. And not even the Elon Musk could save us with the record, numbers that were incredible. I love my little meme I got put into a canvas here. But I mean, it was wild to watch Tesla drop 10% today. Wonder what will happen with Google. Yeah, I'm enthralled. Now, I want to maybe just preface this, depending on where you're at in your investing career, there's a lot of different ways to approach this. I am taking a very risk-off style, and I'm not trying to predict whether the market's going to go lower or higher. I'm just using what I'm doing as basically an insurance hedge against losing a huge amount of capital. I had this argument with my girlfriend, a few other people about like how they should approach this. And if you have a smaller portfolio, you've got cash on the sidelines, and you can take advantage of what might come after this week, then you're going to be in a good spot. But if you're like me, you're loaded to the nines, you got six figures fully exposed to the market, you're going to want to be cautious. I don't want to lose six figures. I don't want to see a 30 to 50% dip in my entire portfolio. So yeah, I'm a little skittish here, folks. Is what we got, some beverages, but today's just going to be a fun day. I love the volatility of the market because if there's one thing this does is it opens up some opportunity for a breath for people to start cost averaging in at prices that are more appropriated to the high flying numbers and multiples we've been seeing in the past, right? So this is going to be a once in probably, what I want to say a lifetime, but it's going to be a once in a long times earnings season for investors to learn from. So I'm looking forward to it. What we got here, guys, is we'll pull up the numbers real quick because I'm going to be leaving these charts up because typically the numbers do release after hours, but with these big tech companies, I always feel like Yahoo or some of these big conglomerates always get access to the information first, and we'll usually see it hit the stock price before we can even see the numbers refresh on the screen. Maddie's already selling it all. I'm still in this market, man, but I'm hiding out in those consumer staples. We got Pepsi posted earnings today, which were fabulous, followed up with what we saw from Coca-Cola. So I'm really happy in the certain aspects of the market where I have more certainty, even though I think consumer staples are kind of overvalued here. I kind of expect Google's earnings. I don't know what to expect, man. I don't think anybody does. That's why I'm like, people think I'm trying to time the market here or something, and I'm not by any metric. I am literally just giving myself an insurance hedge. And if the markets go higher because the earnings are good, then great. And what's it going to do? Run up 5, 10, 15%. So you miss out on a little bit of capital gains. But for the losses that we're seeing in PayPal, Netflix, Facebook, like, can these things go lower? I've always said this, guys, stocks can always go lower. And it's paying off for me so far to have been sidelining this, considering I sold out of my Facebook and Google position, a week or two ago when I already diminished them down a little bit after correcting them in February. Tech getting slaughtered as we head toward close. Like, I'm already getting texts in our group here, people losing their mind. You can see the numbers up here, guys. Microsoft down 3.66%, Google down 3.24% going into close. Visa's down. Like, everything is just getting slaughtered here. So what's going to happen, I'm predicting anyways, is we're going to get through this week. This week will offer certainty to the market because then we know what to expect in the next coming quarter. And we should start seeing the volatility lighten up. And obviously, I'm hoping inflation lightens up. It's what I'm seeing in the commodity prices. So I'm expecting the second half of this year to be a lot less volatile, a lot less insane than what we're going through right now. But guys, that's why we're live streaming, because nobody knows what's about to happen here. It's literally going to be a really historical event. Yeah, Johnson & Johnson, I really like their earnings as well. Actually, it's my largest. It's like my second or third largest position, and it's only off by a few percentage points. And like I said, the consumer staples and healthcare sector is just the easiest place to be right now for most dividend investors are probably singing the grace of this market, because I feel like they got so jaded, watching crypto fly up, NFTs, all that stuff. And now finally, the dividend investors having their day, because most of my portfolio is dividend based, and I am not experiencing the downside. But this is something that I've always told people, like, when you have stocks that run up aggressively, you always just take a bit of profit, trim it into a reasonable size for your risk tolerance, and then buy something else with it. So you're constantly diversifying in different sectors, because diversification is what's saving your life right now. I mean, I'm still invested in things like Tesla, and I'm probably down easily, 4 figures on that position today alone. So I mean, Verizon hit me pretty hard on those earnings, but luckily I got in at a good base, so I'm really kind of down to my cost average there. I don't know what it's at right now. I think it hit the high 40s. I don't know if it dipped back into the 50s. We can scroll down a little bit and take a look. I mean, even VYM, like take a look at VYM, down 1.64%. Where's my VOO position in here? Everything got shuffled around when I was trying to upweight the stocks we wanted to watch. Where is Verizon in here? There we go. Yeah, so Verizon's, at 49. It's down 1.77% today. But the thing with the consumer staples is they're all kind of selling off, even with good earnings. Like Pepsi went red today, which is surprising after really good earnings post. They're just not selling off as aggressively as the rest of the market, right? I think everyone is having losses. No one's avoiding this today. Commodities, so commodities I'm expecting to crush this quarter. A lot of people are speculating oil won't do as well as it did in the past, just because there's just a lot of new taxes, carbon taxes here in Canada. Obviously, margins have tightened up a bit, but who cares? They're going to crush. They're going to crush with the oil at the current level, with metals, mining companies. I mean, commodities have been a great place. I don't have much exposure to the commodity market outside of actual physical precious metals that I own. But I don't even pretend like they exist. I actually don't even document them on my portfolio. And they're still a decent amount in size. Same thing with Bitcoin, right? Like I never talk about Bitcoin, but I still hold my position in Bitcoin. Kyle, do you know Labrador iron ore? No, but I'm sure it's crushing it. Let's take a quick peek here. We're just getting into close here, guys. So we're going to keep an eye out. Let me know when you see earnings drop. I'll check in on it periodically here. So what was the company there? Sorry, I'm getting thrown off. So you're talking about Labrador iron ore. I know you guys are probably just going to pump the commodity stocks. Labrador iron ore stock. Let's take a look here. What do we got? So this one's probably posting earnings. I imagine that's why you're talking about it. It's trading down pretty aggressively here. It's down 30% from its recent highs just in the last couple months. It's same with a lot of the, everything's pulling back, even if it's good, but I just can't project bad earnings on commodities. Major oil earnings will be offset heavily by Russia. So Maddie's the oil king here. Maybe Maddie can come in later and give us some insights on some of the energy earnings because they should be very fascinating. Google just dropped, so we're seeing it here. Is it updating on StockTwits? StockTwits usually updates after hours pretty decently. Let's just refresh this if we can. We're in Google. Let's see. Microsoft. There we go. Let's see what's going on here. It's not dropping too aggressively just yet. They are kind of just flatlining as far as I can tell. So let's just be patient here, and we'll keep an eye out for those earnings reports. But just let me know, guys, if you see the earnings drop, just give me a heads up here and we'll pull it up. Google revenue up 26% year over year. So Maddie's got the early scoop here. So let's pull up the Google numbers then. Google investor relation page. Let's go. Come on, Google, give us some life in this market. So here we go. So we got Q1, the press release right here. All right, we got some numbers. We'll pull up Microsoft's right after here. So let me just pull these up for you guys, and we'll see how detrimental this is going to be to the market. And then we'll go back and take a look at how the stock's doing in after hours. But here we go, guys. First quarter 2022. Google, let's kick it off, man. So revenues went from 55 billion to 68 billion. There we go. Changes in revenue year over year. Not bad. So we're seeing about a 23% for this year increase. Let's scroll down. Operating income was up 30%. Net income. So for the diluted EPS, we came in at 16 billion or 24.62, which is under last year's net income. So I'm curious. That's probably not going to be taken well from the street. What's going on with that? Why are they? What's with the margins here looking okay? So it looks like the operation. What's going on here, man? Let's just take a look at some of the more in-depth numbers. You guys seeing this? Yeah, okay, good. You guys are seeing this in here, right? So far, the worst thing with Google is for some reason our diluted EPS numbers are down. Not sure why, but let's just take a look. So YouTube and Google search. Let's start with these two right here. We'll zoom in a little bit so you guys can see this a little better. So with YouTube's ads, we saw a slight increase, pretty reasonable there. What do we get for Google search? Increased dramatically. Wow. So Google search is up huge from this year prior. So from 31 billion to 39 billion, Google ads from 6 billion to 6.8 billion, Google network from 6.8 billion to 8.1 billion, Google advertising overall went from 44 billion to 54 billion. So that's pretty good. Just is anything missed? It looks like they hit on every aspect of their business. So where are they spending money? So their total revenue, 55 to 68 billion. That's phenomenal. What I want to see is where their operating income loss came in. So Google services, the loss increased from 19 billion to 22 billion. Cloud actually went down, so they've seen a decrease in the cost of their cloud. Other bets, they're still seeing growth here, or a little bit of growth in the cost of other bets. Corporate costs unallocated, so that went down as well. So why is their EPS down? I'm kind of confused here. So what is it? Let's just take a look here. So the diluted EPS, it did drop. Why did it drop? You guys see what's going on here? Live dividends have been dropping real hard. Google is getting hammered. So yeah, why though? Why are their numbers down? So far Google, oh my God here, guys. You want to see something? This is bad. This is bad. I don't know why though. I'm gonna have to read through that, but let me introduce you to what's going on with Google after hours. God, this is bad. Google's now at 22.74. It's now down almost 8% in after hours. Oh my God here, guys. What is happening? So yeah, I don't get it. What were they spending money on? I'm going to just skim through this and just see if there's anything else I can read, because they're going to offer some anecdotes in here. I don't want to bore you guys. So on April 2022, the board of directors of Alphabet company to repurchase up to an additional $70 billion of Class A and Class C shares. So they're doing $70 billion in buybacks. Forward looking, where do we have any comments coming from the board of directors here? Not by the looks of it. I mean, even their total assets actually went, did they go down? Wow. Okay. So total assets went from 359 billion to 357 billion. So we got a decrease in assets, a decrease in liabilities as well, from 107 billion to 103 billion. But man, why is there any comments? Usually the board of directors or the CEO will offer a brief anecdote. Maybe they'll do that on the earnings. Google's. So what do we got? Google services include products, Google Cloud, infrastructure. Yeah. So man, I can't see anything. Can't see anything. Okay. So let's move on then. So what's Microsoft doing? So Microsoft's now down 6%. Oh my God. So anyways, guys, I don't look like such an idiot right now, do I? Oh man, everyone reaming me out for selling my tech. I'm not against tech. This is going to be a buying opportunity of a lifetime. Don't get me wrong. I'm just really fearful of this market in the near term here. So I'm just hedging myself with some cash. And it looks like I'm going to be making some good buying opportunities this week. So anyways, so Maddie's saying on page 9 that they offer some insight here. Maybe if any of you guys want to jump on, I'll give you guys the opportunity here. I'm going to go open up Microsoft now, because we got through Google. So Google had great numbers, but I don't know why their EPS is down. So let's take a look at Microsoft. Let's pull up their investor relation, Microsoft earnings, investor relation page. So yeah, Google missed on EPS, so we don't know why. We'll find out here shortly, folks. So do we got, so here we go, April 26th, we got the press release, so this would be the third quarter, April 26th. So let's pull it up. I want to get the same reaction with you guys, so I'm not going to look at this without you seeing it first. So let me just close that out. Let me bring this back up, and then we'll come back and see what after hours is doing. Oh my God, this is pivotal stuff here, folks. So revenue, let's have a drink real quick. Was 49.4 billion, an increase of 18%. Operating income was 20.4 billion, an increase of 19%. Net income was 16.7 billion, an increase of 8%. Diluted earnings per share were up 9%. So even just at a glance, this don't look like it deserves a 7% drop in after hours here. This already looks better than Google just because they didn't miss on the EPS, right? That bottom line. So maybe we can just take a look. Let's scroll through here. What do we got? So office and products, everything, so long as everything is up. So let's just scroll through here. So I'm not seeing anything really, well, we got to bake it into what the analysts were expecting here as well, right? What do we got? So here we go. Let's get into this. So we got revenues for 2022. So from 16 billion to 17 billion. Services, another from 24 billion to 31 billion. So total revenue from 41 to 49 billion dollars, baby. That's pretty dope. Products increased, services increased. Gross margins increased, research and development went up. So we got some extended costs, but nothing substantial versus the earnings. So this is great too. What's going on here? So we got the basic earnings from 205 to 223, diluted from 203 to 222. Yeah, so I'm not seeing anything bad here. Let's take a look at their assets and everything. So total assets, we're sitting at 344 billion versus 333 billion. So an increase of 10 billion in assets. Liabilities decreased. They went from 191 billion to 181. This is like the greatest earnings report Microsoft's ever posted, really. I mean, these numbers are, the growth is still there. So what's going on, man? I don't know. Uh, yeah, let's not talk about Facebook here just yet. Let's do one thing at a time. So as far as I can tell, off a brief preview there, that there's nothing really wrong with Microsoft. And again, I'm just looking at these at a glance, so take it with a grain of salt here, of course. So let's go take a look again here at after hours and see what the heck's going on. So Google, yeah, man. So Google's now down, oh my God, 10%. Just in the scope of us talking here, Google's dropped like another 8%. I think it went into close down 2 or 3%. Now we're down to a total of 10% on the day. Microsoft now down to 5.41%. It looks like it's actually rebounding a little bit. Maybe people just digesting the earnings because so far Microsoft is crushing it. So I anticipate earnings will regain ground after conference call starts. Yeah, see, this is the fear though, right? Like my big fear is that these conference calls are what's ruining the market because UPS posted great numbers. Coca-Cola posted great numbers. Pepsi posted good numbers. But every single one of them in the conference call ruined the market by making a few statements of, oh, shit's not looking good down the road, right? I mean, UPS posted what would have made Amazon's numbers look great moving forward because they just all had growth. But then they said, hey, guys, e-commerce is going to slow down. So they kind of prefaced what Amazon's probably likely to see, which is probably why Amazon's down now 6.17%. Yeah, this is crazy. So Visa's down 2.78%. So let's see what Visa posted. I figure Visa will do probably the best because it's consumer spending, and consumer spending has been reported as doing relatively okay. So let's go into Visa's investor relation real quick and just see what they're posting for quarterly. So let's take a look here. Yeah, accept the stupid cookies. Let's take a look. So here we go. Q2 2022, I guess, is what they're on, right? Let's make sure I'm pulling up the right numbers here. Yeah, okay. So let me pull up Visa real quick, and hopefully this gives us some. Oh, we got it here. Okay, you guys can see me digging around. Awesome. Okay, so Visa. Actually, I have to share the other screen. It won't let me split over to the screen I just opened. Bear with me here, guys. Take another drink because we're all going to need it after today. So here we go. Let's take a look at Visa. So GAAP income, $3.6 billion or $1.70 per share. A net income, $3.8 billion or $1.79 per share. So net revenue increased by 25%. Is that right? That's crazy. GAAP net income, 21%. Payment volume was up 17%. Cross-border volume, including Europe here, 47%. What is going on with Visa? Man, these numbers are good. Surprisingly, I'm kind of shocked, really. Man, this has been a mixed earnings period, but the market just takes all of it negatively. Look at this. Look at these numbers here. For the 3-month end, year over year, I mean, his service revenue is up 24%, data processing up 16%, international transaction revenue up 48%. The net, wow, man, these are the growth numbers that you could only expect out of like penny stocks. What is going on here? I don't know. This is going to take a lot to digest. So now you're saying Microsoft is up. Welcome back to the volatility. So let's bring back up our, let me go back to stock twits here and we'll see what's going on, folks. Maybe we'll get the streets reaction real quick and then we'll just have a quick convo about this. And then we'll get into some Q&As as well. So let me go back to this here real quick, folks. Yeah, this has been a peculiar earnings period. So yeah, no, it doesn't look like Microsoft's back up. Well, it is rebounding though, definitely. So we got Microsoft now back up, a couple percentage points from hitting those lows. Let's take a look at the reactions here. It's always fun seeing what people are thinking about in Wall Street bets. Yeah, so at least Microsoft is doing some work for us, saving the market a bit. Added more, 265, have 20% allocated left. Yeah, so let's go back to Google. Google's going to be a little more fun, I think. Let's take a look. Nice rug pull. Okay, I'll buy. Glad I have the personal that's stupid ads. Now we're going to get ads in here. Oh my God, taking down the toilet. Yeah, what a wild ride, man. Look at that. Google holding down almost 7.5%. Visa's going in the green, so that's well deserved. Visa deserves to be in the green after those earnings. So again, a mixed earnings report here, guys. It's this bittersweet market that we're in where it's like good with a mix of bad across the board. This is all short-term noise. These companies are great long-term. I 100% agree. 100% agree. This is where the opportunities come in for newer investors to start cost averaging. And if you have a job, if you don't have any debt, and you're able to continue to cost average into the market, probably the best thing 99% of people should be doing. Me, on the other hand, is trying to make good entertainment and not lose my shirt, because when you're buying individual stocks, things get risky. And honestly, after NVIDIA, PayPal, we're looking at all these companies, Facebook trading down these multiples. It's kind of alarming, to say the least. This is a market that I would have never expected here, folks. Gonna get some Google. Yeah, so I don't know why though. So I'm going to listen to the earnings call when we're done here doing this live stream, and we'll figure out what's going on with the nooks and crannies on why perhaps they saw such bad EPS numbers. But hey, Microsoft should start to rebound here. Visa, Visa is going to bring the market back up completely, which really makes a lot of sense from a consumer spending standpoint, because savings are up. People, I don't know, but for that number to be that high, how is international spending up so much? Maybe something related to the geopolitical event. I don't know. So again, if anybody wants to have a quick chat about this, maybe what I'll do is, again, I'll drop the invite link in here if you guys want to hop on, say hi real quick. I appreciate all the 50 viewers that have hopped in for this earnings period. It doesn't look like Google's really regaining any in after hours, which I think they should be, because the revenue numbers, again, are just astounding. Like, I can't get my head over those crazy growth numbers yet not showing positive bottom line. I'm really worried still for obviously e-commerce. E-commerce is a little worrying, but this really enlightens me for what's Facebook trading at right now. I think I should have brought Facebook to the top of the list here. So this should offer some good insight that, Facebook, oh my God, Facebook's down 5% in after hours. We're hitting 177, a brand new low. Shopify getting clobbered here. Honestly, I think this bodes better for Facebook and Shopify, if anything. So, but it's hard to dictate, right? Because a lot of people are just basing this off user growth. So, maybe, Google's going to say, user growth. I highly doubt user growth is slowing down that much. But yeah, this is not, this is a bittersweet moment in the market here, to say the least. Will Netflix bounce back? What's Netflix doing in after hours here? Do I got Netflix on my list? I probably do, buried, because I never follow Netflix that much until the calamity happened. Not one of the stocks I'm too fond of. I've never been fond of those kind of companies, guys. You got to be a little careful with things like entertainment. Netflix, video game companies, they're very cyclical. That's why I've never bought Disney, because, Marvel, they'll be able to ride that and continue to circle jerk it in some terms, I guess, for a very long period of time. But it's hard to constantly make new viral stuff, right? Like Netflix had with Squid Games, which just exploded their stock upwards with new international users. But I think they've maximized their potential in the US. So I'm a little worried for Netflix here, and they're going to have to show some resiliency in at least one of the upcoming quarters if they're ever going to bounce heavy off the bottoms they're hitting. But yeah, man, I'd love to know what you guys think about this. Are you guys holding Google? Are you holding Microsoft? Like I said, most of my family, and I've talked to people about sidelining this earnings, and they thought it would be more appropriate just to ride it out, cost average into the dips, because their positioning and cash position is much better than mine. My cash position was bleak. I reinvested all my cash, and then all of a sudden I realized what a bad idea that was for me, not for everybody. And like I said, it's been panning out beautifully for me, to say the least. I got out of these stocks at great prices, so it looks like I'm going to be able to buy these back. Question is when I buy them back, and whether I do it through indexes or not, because the problem I'm having right now with my mentality is that I love Apple, Microsoft, Amazon. I love Google. I love Nvidia. I love Facebook. I love all these companies, and they're all like 50% of the top weighting in the QQQ ETF. So I'm like, maybe I'd just start cost averaging the QQQ and just gobble them all up while the markets are suppressed. Holding all my individual positions and buying the NASDAQ aggressively. Yeah, I honestly think this is the opportunity to start buying it more aggressively. I think we're getting the uncertainty lifted. The fact that, Microsoft crushed it, Visa's doing great. Our consumer staples have crushed it and done fairly robustly. I think the only place we're going to get clobbered on that I'd be cautious for is e-commerce. I put my hand on Kyle's hip. When I dip, you dip, we dip. Best comment all night right there. You don't love them. I love them, man. I love these conglomerates. Their balance sheets are insane, and they're still growing like penny stocks. Microsoft's numbers are resilient at this scale, to say the least. Apple's going to be an interesting one. I'm really concerned for Apple. It's one of the reasons I sidelined my Apple position, was primarily just because of how long it's taking them to ship products. If you go to try and order a brand new MacBook Pro right now, you have to wait till the midst of June to get it. So, if you don't think there's supply constraint issues, just go look at Apple shipment dates. We're in April still. So we got to wait 2 months to get an Apple product if we're ordering it today off the website. So that is quite concerning from a delivery standpoint, right? So, it's going to be the same thing. Like if UPS had good numbers, but stated that they're going to see a slowdown in e-commerce, that makes me a little fearful for Amazon, but it doesn't make me fearful for things like Shopify. because Shopify has been having great traction on Google Trends. Its Google Trends traffic has been better than Facebook's and Google ad rates. And even with how like lackluster their search traffic's been, Google just posted great growth numbers. So I mean, it's not like the markets are that bad, realistically. So most of it's FUD. Doesn't not that the market gives a shit. Market will do what the market does, which remain irrational longer than you'll remain solvent. To be honest, I want them to crash. It's a bad sentiment because I'm such a long-term investor, but like I said, when we were sitting going into where the end of last year with all the lowered guidance, it's obviously slightly concerning, but I feel like it's all being priced in at this point. And this is just where you can, with ease and understanding and certainty, buy back in, right? Or continue to cost average in. So I mean, I just want to get through this week, man. I just want to get through this week. Missed earnings are only relevant to what some, what are we saying here? So missed earnings are only relevant to what some Wall Street analysts subjectively believe companies are worth. Google, Amazon, Apple, Microsoft are only going to go up long-term. Yeah, no, obviously, like over the next 30 years, I can't see how these it's not like it was in the old days, in my opinion. I mean, if you go look at GE's balance sheet, if you go look at, a GM's balance sheet, and you look at these companies that were super cost inefficient, they used to sit at the top of the index in the early 2000s, right? Right when we were going into the dot-com bubble, they were still some of the largest companies on the S&P 500. But I feel like we're in a different era where technology like hasn't really existed except for the last 20 years at this kind of growth rate. And it's so young and in its infancy. It's not like General Electric or GM that have been around for like literally decades leading up to their large market caps. Like this is such an early day for these tech companies that I feel like buying them individually over the long term, yeah, things might come in and out of favor depending on what becomes the next hot cycle, which I think will be healthcare. I think inevitably over our lifetime, healthcare will eventually become some of the top weightings, and it'll largely be backed by technology because technology is what's innovating healthcare right now. But when you look at where we're sitting at in the current, like the last 20 or 30 years and how the market's evolved, I don't think you're going to do wrong buying these top weighted tech companies because their balance sheets were so much more resilient than General Electric's was in the early 2000s, right? Because I mean, if General Electric, when you go look at those numbers with GM, like the debt they have on those balance sheet are so ridden, like it's so bad. I don't think that'll ever happen to a company like Microsoft, Apple, or Google. There's such margins like that never existed in the market. Like to find companies that could trade at 30, around that 30 to 50% margin rate was like non-existent. And now we're seeing it with Tesla, right? I mean, Tesla's the first car company to introduce such high margins on sales. So it's a different era we're living in where I just don't think it's easy for these companies to go broke. I mean, you could literally see Facebook or Apple wipe out their entire main businesses of advertising or iPhones, and they still have how much money does Apple have on the balance sheet right now? Let's just take a look. Because I bet you it's more than most companies' entire, I bet it's more than the bottom half market caps combined. Like, it's insane. So, I mean, we're living in a new era where these companies are easy to buy. The risk is really mitigated from a balance sheet standpoint. Let me just pull it up real quick. I'm just curious now. Oh, what has Apple got for cash? It's a good question. So basically, ending of 2021, Apple was sitting on $62 billion in cash. What was Facebook sitting on? I know Facebook's increasing their expenditures. So I'm presuming their cash position is probably a little less. But again, think about that, guys, $60 billion in cash. Like, it's freaking insane, man. Like, yeah, so you look at Facebook sitting on almost 50 billion in cash. What's Google's cash? But I should have actually just looked on the earnings release, but let's take a look at Google real quick. Yeah, so I mean, it's just nuts, right? These companies are almost sitting on 1/10 their entire market cap in cash alone. I mean, the value to that is insane. I mean, you could buy so many businesses and still continue to cash flow into the future. Yeah, I mean, look at that. Google's sitting on 140 billion as of 2021 in cash. Or never mind, cash and cash equivalents. Did I get that wrong? No, they are. Well, other short-term investments are sitting at 118 billion, 20 billion in cash. But it's all cash convertible. Give them a thumbs up. Yeah, have a drink. Don't give me a thumbs up. Go pour yourself a beverage, man. Ark and psychedelics. Wait, what is this one? Ark G and psychedelic stocks going to have a full-blown renaissance in the next 10 years. So that is an interesting topic. In and of itself, it's been the worst hit sector. The genomic sector just crushed. If you go look at the Ark G, great example. But the problem is because it's a risk-off environment and pharmaceutical companies don't make cash flow. There's no earnings per share. They're purely based off future results and expectations of what these drugs' capabilities are. And if I'm being honest, I think they're underpriced. So yeah, it's a tough debate, man, because you want security and safety in your portfolio. You're never going to get that from healthcare. But the problem is if healthcare, I mean, I think you can get some security in Pfizer. They're really forefronting mNRA. I mean, what they did was a historical marvel through this pandemic. As much as there's anti-vaxxers, as much as you got to listen to the bullshit from what people are going to spoon feed you about this pandemic, the fact of what they achieved with those vaccines were a medical marvel. mNRA has only been something that has been able to exist because of the advancements in technology. And when you look at the drug segments that are being approached because of mNRA, whether we're talking cancer treatments, I mean, we're talking about the cure to so many things like what's the one disease called that they pretty much have a cure for? MS. MS is going to be cured probably in the next 3 to 5 years. They've cured it in animals. Like the results that I've seen from some of these drug companies is astounding. I mean, it's nothing less than jaw dropping. And I've talked to a lot of people in the pharmaceutical space because I work with these companies on a literally almost a bi-weekly basis. Some of these guys are working on sarcoma cancer treatments. I posted some of those videos to my channel, these guys I'm kind of working with. And these guys are literally saying, these doctors and these pharmacists that I talked to said, what's going on in healthcare right now is the equivalent of what was going on in the 1990s with the tech boom. Just people aren't seeing it happen. They're not really experiencing it. But I think the vaccines were literally an exemplifier of how advanced technology is getting when it comes to healthcare. So I would be maybe if you have a little speculative part of your portfolio, maybe take like a small percentage and just dump it into those psychedelic companies, those healthcare, like highly speculative companies. I think buying the large caps, you get some of that exposure with Pfizer, with Johnson & Johnson, because they're obviously going to take the upper weight of it. Because what'll happen is MindMed will inevitably post phase 3 trials. And if they are as resilient as we expect them to be, that's when you're going to start seeing the large cap companies approach them and they're going to get bought out. I'm almost certain that's what's going to happen. But yeah, over a lifetime, man, give it 10, 20 years, they're going to take over. Psychedelics, those drug segments will be huge. 1% of the portfolio for ARCG. Yeah, same thing with like my girlfriend has exposure to ARCG and it's been an abysmal place to park capital, but it's just hard not to see the hopeful future that those kind of companies offer. Merck, BMY, J&J, AbbVie, it's a really good way to do it. It's a good always to mix large cap with small cap healthcare. I've got Pfizer, I've got Johnson & Johnson. I mean, they're some of my largest positions at this point. But yeah, so outside of that, folks, healthcare, you know, the earnings there, you can't really worry about those. So I wouldn't sit on them. I would just park that cash, set it, forget it, pretend like it doesn't exist for 20 years. But anyways, so we're about 30 minutes out from hearing the first earnings report. I think Microsoft is first. Google comes in at 5:30. So I would really be taking a listen to those, get some insight. A lot of people don't listen into earnings calls, but if you don't listen to earnings calls, you're going to miss the most crucial news. Like when Facebook, Mark Zuckerberg, nobody mentioned it, but he basically said they've been seeing a slowdown in conversion rates. That's what scares the shit out of me is the small business conversion rates. So I feel like Facebook's going to have some big headwinds tomorrow. So we're going to revisit all of this. We're going to grab some more drinks here, guys. This has just been the initial warm up. And let's just take one more look to see where the markets are doing, finishing up the first half hour of close. Now that we've got numbers baked in here, it looks like Microsoft has rebounded beautifully. Well, not beautifully, but it is rebounding. So I suspect even in this current market sell-off, you know, Microsoft might not rebound aggressively because no stock is rebounding or going higher on earnings, but at least we're not going to see like a Facebook situation. I can't see Microsoft dropping 20 or 30% with those numbers. So we've kind of scaved us some pain there. Google, we're going to have to listen to the earnings call, figure why EPS is down so much. Hopefully we get some good insight because revenue was great. So we'll see what's going on there. And then we'll revisit tomorrow, guys. We'll take a listen to Facebook and hope for the best. So on that note, folks, I appreciate everyone stopping in. Like I said, this is going to be the funnest 3 days of my investing career. And then we're going to revisit probably on Friday or next week. And we'll talk about what I'm personally doing with my portfolio, whether I've decided to go index funds or buy back into these stocks individually. But at least some of the tension is getting relieved. Certainty will return to the market. Inflation will start to tamper off. And hopefully we can go back to normal and party it up this summer, you know, like it was before it was March of 2020. All right, folks. Facebook owners might need some bourbon. Hey, man, I got hit hard on it. It was my largest position. And luckily, my cost averaging in was over years. So I didn't really take major losses on it, but I did get hit. I did get hit, man. Facebook, I still believe in them. I don't have my Oculus here. I still believe in VR. I still believe in all of it. I think they're great companies. This is going to be your opportunity to buy them up. I'd rather listen to a woman screaming at me than this beta male. By all means, go listen to a woman screaming at you, man. You can go watch the trials. I mean, there's trials between Captain Jack Sparrow there, Johnny, Johnny and his ex there. I mean, those have been pretty interesting. Um, you need to dye your hair green or pick. Yeah, I need to become Meet Kevin, right? I'm not trying to play the market here as much as people think I am. I'm still like 80% of the markets. I think I'm just doing me, man. I'm just doing me. I'm not trying to be Meet Kevin. I'm not calling. I will call him out though for thinking he caught the bottom of the market. I remember Jeremy calling him out saying he was celebrating too early, and clearly he was celebrating too early, which I think is funny because, I mean, we all want to be right. At the end of the day, that's the market. It's about making money, right? So you're placing bets, and if you're publicizing them, it's a ballsy thing to do. But I'm not going to sit here and gloat whether I've been right or wrong. I mean, I sideline my tech investments just out of pure fear of the scope of how large those were in my portfolio, right? And I'm still long term. I just don't, like I said, if I saw Facebook drop as much as it did, there's nothing saying Microsoft or Apple can't do the same, right? And it's something I would have never anticipated. But again, I just do me. I just do me. Sorry, I didn't mean to hurt your feelings, but come on, man. You're not a biologist. I'm not a biologist, but hey, unlike you or most people in this market, and not maybe I don't know what you're doing, so I can't say like you. But I sit here and I talk to these companies every day. It's my job to like literally talk to the CEOs of these companies. So I feel like maybe my insight's not like 100% on point, but hey, I'm dodging a lot of losses here. And again, I'm not gloating that I'm right because I could have easily been wrong, and I knew that. I'm speculating. But I'm just saying, man, I think it's one thing to do something in the market. It's another to gloat about it because things change so rapidly, right? And Meet Kevin gloated 9 ways to hell about what he did. He gloated so hard that the lemmings followed him back off a cliff into those stocks. And guess what? Those stocks he bought back into are now back toward all-time lows. I'm not going to do that to you. I'm just telling you what I'm doing. I'm not going to have anyone follow me into these trades. So, I mean, I hope you guys enjoyed it, though. Like I said, man, you can't win it all. It's just about not losing money. That's Buffett's rule. You just got to avoid the major mistakes in your life. One major mistake wipes out your entire portfolio. Could you imagine if you followed financial education into small caps? I know he doesn't give a shit because the guy's worth millions of dollars. But if you only had 50 grand in the market and now it's only worth 10 or 20, you ain't sleeping easy at night, my friend. You ain't not sleeping easy at night. And I'm not sleeping easy at night. So I adjust for my intuition and I sleep comfortably at night because I know I'm not going to be losing, fucking 30% of my portfolio. So anyways, I don't want to get belligerent with you guys. You're a good sport. That's cool. Wish you well. I wish everybody well, man. I wish you well. I wish everybody do well in the market. And like I said, I may trade in and out of stocks sometimes. That doesn't mean I'm bearish on them at all. I just don't have hedges, right? If you're not in if your assets are all correlated to the stock market, I don't think people understand the risk that comes with that. And if you're buying individual stocks, the risk just exponentially goes up. And if Facebook, PayPal, and Nvidia aren't an example of that, I don't know what is. So most people buy index funds. I'm playing the individual stock game, so I'm taking a very cautious approach to what I'm witnessing. So Visa did good or bad. Visa crushed it. They crushed it. Visa's going to the moon. Let's see where they're at in after hours. They're not up flying. Nothing flies on good earnings, but it is green in after hours. So anybody buying Visa, especially after all the crap they got from Chamath Palihapitiya, I mean, I remember that. You remember that? Chamath was literally saying short Visa and go buy crypto. Well, how did that trade work out, by the way? Like, this is why it's so funny to listen to billionaires because they're so rich, they don't have to care what happens, and they don't care about you. They just care about what they're doing. And I mean, look at that. So how much is Visa down? Visa is down from its all-time highs about 18%. So let's say over the same time period, you put it in Bitcoin. What's Bitcoin at right now? So Bitcoin over the same time period from its all-time high, roughly peaked at the same time Visa did, is down 42%. So unless you buy in altcoins, which some of them are doing well, I guess. And most of these rich financial YouTubers don't care. They make their money from YouTube monetization. Yeah, I'd agree, right? That's why I always try and preface, people, same with my girlfriend, my family, we have intense discussions about risk tolerance and what's most appropriated from a diversification standpoint. And like I said, for me, I don't own a house. I don't own anything other than my own private business and stock investments, that I feel like I have to be a little more careful with what I'm doing. Because some guy told me the other day that now I'm too diversified and I'm not going to outperform the market. And it's just you got to understand, it's not that I'm trying to outperform the market. I've never tried to outperform the market. I've just been trying to be diligent with specific companies, and it boded very well. I'm just trying to protect my life savings. I have enough money now to set me up for the rest of my life. I don't want to F that up. It takes one bad decision to F up your entire life savings. The stock market is a scary place that needs to be taken with extreme caution and understanding. I know it, and when the market for the last 10 years has been nothing but straight green and very easy to predict, it seems like it's not risky. It seems like you can make a blind investment in penny stocks and get away with it, and you could have. But you had to understand that, like, I could have made millions of dollars if I leveraged way more into things like, Tattooed Chef, into things like Hyliion, into things like MindMed. But I didn't. I put a really tiny risk appropriated amount. And I think I only put $7,000 into MindMed. I was sitting on a 6-figure portfolio when I did that. I could have easily leveraged 20,000 and have made 6 figures off that trade. But I'm not that nuts. I don't have my balls don't hang that low, unfortunately. But again, in moments like this, because I don't have those kind of cojones, I'm not getting slaughtered with the rest of the market. So, I mean, like, where Jeremy and Meet Kevin have just been getting wrecked, I haven't been. My portfolio is probably only down like 5% or something. I mean, I'm still sitting at really close. I think I'm sitting at 375,000. I was at a peak of 390,000. So whoop-de-doo, right? Like, that's nothing in the scope of what's happening here. A bad take from Shamoth. No way that crazy. Yeah, I know, right? Exactly. Funk used to watch a lot. Now I only listen to the Friday night live stream with Kyle, Matt, and Ryan. Yeah, I think, Ryan, myself, Matt's become a very good proponent of, cost averaging into index funds, not trading the daily market. If you have a full-time job, if you're not analyzing this stuff, you should take a breath from the market and just realize that you're not taking on the due diligence that might be required to sustain a positive portfolio, right? Because sometimes, I see the risk even with people like PPC Ian, where he's like, okay, you don't even have to worry about the stock performance, just buy really good foundational dividend stocks and you should be all right. And realistically, I think you'll be all right. But for most people, I mean, he owns 40 stocks. You could easily achieve what he's done with a mere ETF and have none of that exposed risk when you're seeing things like 3M, Starbucks. I mean, you're not safe in any investment. There's no safety when money goes into the public market. I mean, look at REITs. You think real estate would have been safer considering real estate was booming, and then all the REITs just sold off for some reason. Literally within 3 months of the pandemic, REITs or real estate was crushing it. All of a sudden, residential real estate was going through the moon, but you didn't see that with residential REITs for the first several months of the pandemic. Still bullish on Canadian banks. That's like my PPC in perspective. Like, I don't really care what they do. I've been in them for so long. I've been in bank stocks longer than I've been in tech stocks. So they come and go and I'll buy them and consistently cost average in. Anyways, folks, I'm rambling. I don't know what points I'm making, if they even make any sense, but hopefully you're learning something. So we'll catch you all tomorrow. Same time. It's going to be another pivotal earnings. I'm going to go listen to Google and perhaps catch or whatever comes first. I think Microsoft comes first. Let's check just so you guys are aware. Google's earnings. When are we getting the conference call for this guy? 5 o'clock. So we got Google first and then I think Microsoft second. So go check that out, learn something. We'll reconvene and have a fun conversation.